Good afternoon, ladies and gentlemen. Welcome to the last half an hour of markets on T-1, which is a day ahead of the monthly F&O expiry. The Nifty up 34 points, barely above 24,850. This is a level which we've seen in June of 2025. So the index is at a 1 month low right there in front of you, and you see it bouncing from the 100-day moving average yesterday, where the low was somewhere like 24,600. At the moment, 24,860 for you. Remember, there's a bout of short covering that's happening in the market ahead of tomorrow's monthly expiry, July 31st, as also the last trading day of July. All of July, the index has been in a corrective mode, losing somewhere like 1,000 points till yesterday's low after a rally of 4,000 points. So March, April, May, June, the index added 4,000 points, and in the month of July, because earnings have been tepid, because there is an absence of the Indo-US trade deal, and of course there is profit booking by foreign institutional investors to the tune of about 36,000 crore rupees in a net basis on Dalal Street. That's what you see in front of you, a 1 month low as far as markets are concerned. A very quick look into the broader structure, and then we'll get back into a conversation with Mr. Avasthi today. He's be our main guest. Look at government insurance companies, NIACL 17% higher at 202. You have a strong move coming into DMart, which is Avenue Supermarts, up 7.5% at 42.99, and of course the chemical space on top shape. Sumitomo Chemicals, Jubilant Pharmova up 7% each, and a new high as far as markets are concerned on 4 plus 4 plus 4 plus 4. 16 stocks on NSE 500, starting with Sumitomo Chemicals 7% higher. You have Naveen Fluorine about 0.5% higher, 51.82, and of course from the pharma space, Torrent Pharma and Laurus Labs. So overall, the mood in the market today is a light shade of green across the board. 1,400 shares in the green versus 1,100 in the red. You have gains in about half of the market. 19 indices is what we track, about 9 are in the green. FMCG, Alpha 50, the Nifty 100, 500, 200 indices are in the green. There's profit booking on realty and auto and in the PSU banking sector. Amongst earnings update, Asian Paints has been a bit of a disappointment, but numbers from Bank of India are pretty good. Now, with this background in mind, let's welcome our guest for today. We have Mr. Sharad Avasthi, Head of Research at the Private Client Group at SMIFS Securities, joining us from the City of Joy, Kolkata. Namaste, Sharad ji. A very warm welcome. There's everything in the market but joy these days.
Thank you. I think, yeah, largely it's been a bit range bound for some time now. But I think the international situation is as such that you can't really blame the markets, and the quarterly numbers also have not really given a very clear cut, direction as to improvements, etc. So I think vague, not very bright quarterly numbers from some of the larger players, particularly IT and some asset issues, credit cost issues on the banking side. These two are the major derailments for the market. And on the international side, I think the tariff related uncertainty continues to go on. So I think these two issues are causing us to be in a very broad range, basically not going anywhere. But we again expect, that the major headwinds that we were seeing earlier, inflation, I think that is something, and lower, higher interest rates. I think both these should reverse more in the months to come. And once the tariff issues are behind us, I think it's a high probability that we would resume the uptrend.
Right. Sharad ji, because you track markets from the research lens, what has been that one outperforming stock for you in the month of July, and that one disappointment that you feel was undeserved?
I think maybe the disappointment on Kotak Bank has been a bit too stretched. We feel that at these valuations, it's probably something that could sustain going forward. And regarding something that has been positive, I think after the numbers, I think cement as a sector seems to be getting better and better. So I think cement could be one sector that's largely been positive, rather has surprised us on the upside also in terms of outperformance. So I think that is one sector that has positively surprised, and one stock that has maybe overdone what it needs to do because of the quarterly numbers could be Kotak Bank.
I understand on Kotak. This has been, you know, something that hasn't done anything for 5 years, and one hoped that the earlier rally that we saw would take out shareholders who've been in the stock for about 10 odd years in a very happy mood, but such is life. Disappointments are a part of the market just as gains are. Sharaji, uh, a view on the pharma space. You are a very good picker of value, and we've seen a very sharp uptick in pharma stocks in the month of July. 20% gains on Glenmark, 25% gains on Laurus Labs. These are all well-known, high quality, large market cap stocks which have given stellar returns. Is there anything still left in the market on the table within the pharma space as far as SMIFS research is concerned?
Uh, yeah, I think maybe the more favored names might not have much upside left, the likes of Loris, etc. But I think Dr. Reddy's is something that we are looking at. I think that's a decent name to look at. And we think, that probably the Indian focus and the new drug launches on the biosimilar side could help them. On the US side, the new drug launches should help, and most probably it will not be as bad as it has been for quite some time in the US. So maybe the downfall will get arrested in terms of prices. So I think, yeah, Dr. Reddy's is something that we are looking at. We feel one of the most attractively valued larger pharma companies. So that is one stock where we think valuations are still pretty attractive. So we are initially working with targets of around 1500, 1550 maybe.
Okay, so that's the view. Dr. Reddy's sadly hasn't been much of a performer in the month of July, and this is a catch up trade which might happen. Ditto for Sun Pharma. The highest weightage in the pharma index of 22% rests with Sun Pharma, and this has been a stock that hasn't done anything in the last 1 month. In fact, hasn't done anything for the last 1 year or so. So this is something that maybe Sharadji can comment upon. Sharadji, a view on valuations as far as Sun is concerned?
So 33 times forward, expecting 14-15% kind of growth. I think unless and until we have some positive surprise in terms of the new launches, etc. And to top it up, I think they have the largest branded portfolio amongst most of the pharma companies. So in case Trump decides to do something on the pharma side also, I think they could be hit. So I think I would still avoid Sun Pharma at 30-35 times forward. Yeah.
Okay. Sharadji, let's discuss the elephant in the room, and that's Tata Motors. I'll request the PCI to kindly fire the long term chart of Tata Motors. A disappointment today as far as stock markets are concerned. This is amongst the top losers as far as the Nifty is concerned, about 3.5% down. Yes, this is the top loser, 669. And the news in the market is that Tata Motors is considering a bid for a $4.5 billion bid for Italian truck maker Iveco. Iveco, on its part, has informed shareholders that it always is looking for, shareholder accretive deals that might enhance their value, and therefore the market is now in uh, a bit of a conundrum. Tata Motors has halved in the last 3 years or so. From a high of 1200, we are now down at 650. Sharadji, what according to you would be the one or two pluses as far as this potential bid is concerned. Is this a JLR moment for Tata Motors again after 2008?
Yeah, certainly. The only difference being maybe, that when they acquired JLR, the difference between the domestic business and the business they were acquiring was very huge. This time, probably the difference is not that huge in terms of the total company. In terms of the CV business, yeah, it remains very similar to a JLR moment. And I think it's apt for Tata Motors to think like this because I think the CVs should, in the long term, show very good growth rates. And on the domestic side, whatever R&D and initiatives they have taken, I think they have a dominant share. But are they evolving into something which is a global kind of player? I think they needed some external support to do that. And as we understand that this is a company which is at par with the likes of Daimers and Volvos of the world. So I think it's a positive development for the company. Initial reactions, yeah, because it's a large size deal. We had just come out of, the debt pangs of JLR. But I think this time it is very different because the size of the existing entity on a console basis is very large. So I don't think it will be as pressurizing on the balance sheet as probably JLR ended up. And most probably we are not buying it at the peak also. So I think, and with the Tatas, I've been very fond of them in terms of doing big acquisitions and turning them over a period of time. I think it started with Tetley. Even then, it was very, unfathomable to understand that Tata could buy Tetley and convert it. But it happened in a very smooth fashion. Then JLR happened. I believe Chorus is the only thorn in the flesh which was not converted as effectively, maybe because of the metal cycle also, etc. But other than that, I would be very happy with Tata, transforming into a much larger player. Sooner or later, the demerger should also happen. So I think it's good for shareholders. And at these valuations, I don't think you have much to lose.
Okay, ladies and gentlemen, let's just dial back in time. Somewhere in 2007, 2008, Tata Motors took a global step. It was a local commercial vehicle maker in India, the largest player, and of course, it had taken its tentative steps into the passenger vehicle market by making what was then known as Indica. This was a diesel and petrol variant, and it took a leap of faith by buying UK's Jaguar Land Rover in a deal that was globally feted, but at that point of time was something of maybe probably buying a bit more than what you could chew. Subsequent to that, Tata Motors has digested JLR very well and has used its technology in cars to improve its own fleet of products. Now, Tata Motors is a leader of EV vehicles in India over the last 5 years, and therefore it's this JLR moment for Tata Motors again. Now it's a global auto giant trying to buy out a truck major in Italy. So this truck major, Iveco, makes buses, makes trains, and also has a defense portfolio. Apparently, the Tatas are keen to bid for the commercial vehicles business. What will happen or not, only time will tell, but for the moment, Tata is reacting a bit negatively on the charts. And an interesting two set of charts I want you to see. I'll request the PCR to show us the year to date chart of Iveco. The stock has doubled from €9 to 19, and this particular information has been taken with great enthusiasm by its shareholders. And now we'll show you the performance of Iveco versus Tata Motors on a year to date basis. This is the comparative chart for calendar 2025. Iveco is up about 90% year to date, and of course Tata Motors is down 14%. So this is the story so far. Valuations for Tata Motors, the stock that has halved over the last 1 year or so, are below 5-year median as far as PE and P book is concerned. So as Sharadji very well puts, that now the balance sheet is large enough for them to acquire a company the size of $4.5 billion. Whether that might happen or not, only time will tell, but this is something that at least the European markets are looking forward to. Sharadji, Iveco in its statement mentions, its financial statement mentions that the entire CV vehicle market in Europe is contracting. What do you think are the 2 or 3 benefits that Tata Motors might have if this transaction goes through?
I think the tech and branding is one of the major things that they will benefit out of it, because I think the way the group has transformed on the passenger vehicle side, the commercial vehicle side has not really evolved that much. And I think electric on the larger vehicles, that is something that could help them. Hydrogen could be something which could help them. So I think it's a lot of technology oriented thing. When JLR happened, people could not understand the technological impact that could bring to Tata Motors. But now, since most probably Tiago, we have been using those platforms and we have seen the improvement. The recent launches are further proof to the fact that how it has impacted. And this time around, I think scale is not an issue. They know the local area much better now compared to earlier, which was the first approach for them out of India. So I think this time around, it's largely the technological prowess and the strong brand. So I think once you get a strong brand on board, Tatas are a home-trod brand in India, but I think internationally for their CVs to demand that kind of premium, suddenly you ratchet into the premium side, and it's not easy, getting into the premium side of the market in any market. So I think that's big positive that they would enter the premium side of the CV segment, and the type of improvements we have been seeing here for most logistics companies, transforming to the higher end of the trucking market. I think a lot of development over the next 8 to 10 years will happen in this space, which will, shovel yourself into the premium side of the market. Like earlier, the driver cabins, etc., were not something you were looking at. But now these are things that are being looked at. So I think we are going to become a developed nation, or a much more better nation over the next 5 10 years, and a lot of demand for premium trucks is going to come in. And I think within that play, this perfectly suits and balances into. Maybe the European markets will not offer that much of a growth, but I think India and other export markets, particularly the developing countries, they will open up new frontiers for the commercial vehicle space for Tata Motors.
Okay, two positives that at least I can make out is that the Indian highway network, the expressway network, which is the backbone of the entire economy, has improved dramatically over the last 4 5 years, not only in terms of motorable expressways, but the quality of those expressways. Those living in north part of India will vouch for what I say. And the fact that now bigger haulage trucks are seen on expressways, which is 32 vehicles, 64 vehicles, 20 vehicles, because they haul a lot of cargo at a single point of time. That is also a positive for this potential transaction. Whether that happens or not, only time will tell. But two more statistics. The PE of Tata Motors is half that of Nifty, 9, and the price to book is 2.1 times. So Tata Motors is trading at a very, very reasonable valuation as far as its own relative profile is concerned over the last 4 years. And for those who are into ratios, it's at 0.5 times sales to market cap. So revenue is 4.3 lakh crores, market cap is 2.4 lakh crores. So for those who hunt for value, maybe Tata Motors is something that they should look at. Be that as it may. 318. Sharadji, what are you looking forward to in terms of August? What could be potential triggers in the market, which is slightly sad in the month of July?
So I think firstly we would be through with the quarterly numbers. I think there's a lot of volatility during the quarterly season, and this time there were some hip hops and flip flops regarding the various numbers. So I think once the quarterly result season is over, we would look at a much clearer trajectory. Though we are not expecting any kind of interest rate cuts either from the US or from India. Tomorrow, most probably, the US Fed meeting will conclude. But I think the tone around US interest rates could substantially ease by August. And 25th August, most probably, the US team is also in India to further discuss trade tariffs, etc. I think that could create some positive environment for India. And the way the China deals, etc., talks are going on, if something positive comes out from that, I think maybe we will take a positive leaf out of that also. So I think I think tariffs is something that you would largely focus on during August, and some somberness in the tone or tonality of the Fed that could further add. In case we do get a surprise cut from RBI, I think I'm not expecting that, but if we do get, that's like an icing on the cake. But largely, I think tariffs related issues getting sorted out, and the other one could be, much somber the outlook regarding the interest rates. These are the two things that should probably cause some euphoria or positivity in the markets in August.
Okay, fair point. That's something to look forward to. Sharaji, two sets of rate cuts worth 100 basis points from February onwards till early part of May June did not provide the much needed kicker to corporate India. What what do you think went wrong in Q1?
I think in Q1 it is. I think firstly the type of impact that we were expecting out of tax breaks has not really happened. Maybe monsoon arriving a bit earlier may have derailed some amount of growth rate. But all that I think is these are the two possible things, and tariff related uncertainty. I think the way it has gone up and down, I think that's something. I believe the markets were largely expecting that something would happen very smoothly with respect to India, in terms of the trade deal, tariff deal, etc. But that has not really happened, and that is something that unnerves the market. And regarding the numbers, I think again, IT and banking really disappointed in terms of what they produced, particularly banking with respect to credit cost, agri, NPAs, etc., going up. So I think that's been the major problem. But I think that's behind us. And what happens is the type of impetus that you have given to liquidity and then BFC relaxation, etc. Generally, there is a 3 to 6 month kind of lag for economic impact to be visible. So I think post monsoon economic activity is going to come back. So the next 2 3 months, most of these would get addressed. Lower interest rates, lower inflation, uh, tariff situations behind us, and most probably much better quarterly numbers also. Rural consumption has been showing good improvement. I think urban consumption will also start happening. I think bigger problem remains private capex that is still not coming up. So maybe over the next 3 to 6 months, when we see this, consumption boom starting to emanate, then probably private capex would also become more confident in terms of committing more to the capex sector.
Fair point. That's something to look forward to. Uh, any disappointments in macro that seem to be bothering you, whether it's the rupee movement? Inflation, of course, has come down dramatically, but any other macro number which you feel is inhibiting the market behind?
I think the IIP numbers have been disappointing. As I told you earlier, earlier monsoons, etc., may have derailed a part of it. There is a high base effect also, most probably, but I think by August, most probably the high base effect weans out because last year, August, we saw a good dip there. So I think IIP numbers have been disappointing, and largely, if you consider the domestic side, I think the credit cost part has been a bit disappointing on the larger banks. I think that going up was something I was not expecting, so that really negatively surprised me. And the IIP numbers have not been that robust, though they are perceptible to be revised, going ahead. But I think the early onset of monsoon, etc., has derailed a bit of action. So maybe the later part of monsoon is not as severe as the earlier part was. So that might result in some improvement happening much faster. And the festive season also, I believe, this year is around earlier and spread over a longer time period till the year end. So that should also help.
Right. Sharadji, your view on IT. Uh, it's been a soul destroying month for the IT index, down 10% in July. Stocks like Tech Mahindra, Infosys, TCS, HCL Tech in particular have lost anywhere between 12 to 15, 16% of their market capitalization in July alone. Lots of pain in corporate earnings, in guidances, in their talk with analysts. Is this a zone that you are interested in buying, or you see more pain ahead for at least top five?
No, I think you should delve into buying these. I think maybe the worst is already priced in. I know regarding growth rates, there are some commentaries, that if there is no growth rate, what are we paying for? But I think there are transformational changes that are happening within these companies, as we have discussed maybe way back when we were discussing Coforge. That they are focusing more on the management consultancy, etc. High gestation business may take time to convert, and they are adopting the broader trends in the international markets at par with the larger players internationally, which was not the case before this. So I think all that will play out very positively once the tariff tantrums are over and we have more clarity in the US also. I think the US is also very unnerved regarding these tariffs because we don't know how it is going to impact inflation there, because they have more of a supply side issue. It's not like China, which is more of a consumption side issue. So supply cannot be raked overnight. It's not possible. So I think they also have that problem. They're trying to act smart, act hard, but I think it's very difficult for them. So I think once the US tariff issues, etc., are undone and we have clarity about what it is doing to the inflationary trajectory, etc., the view about the US economy will be much more clear. And then probably the larger steps that these companies are taking, the short-term view will also be much more clearer. And the larger steps with respect to consultancy and delving along with international players in the recent trend changes in IT. Once they deploy that, I think these stocks might be re-rated very fast. Top bets, I think, where we are expecting large improvements to happen would be LTIM and Tech Mahindra.
Okay. And one more sector that got it on its chin was defense. 25-30% erosion on BDL, Masgaon, Garden Reach, you name it, over the last 1 month, they've been in pain. Is the correction over? Are you hopeful for maybe a good close for 2025? You generally stay away from frothy valuations and momentum.
Yeah, but now I think after this correction, it does make sense to come back into these stories. I don't think that there is any doubt that these are very good long-term stories. The export side of the story opens up, and we have spoken about this earlier also. Occasionally, you will have these blips, where it will not be linear in terms of the numbers these companies report, or maybe some big order cancellation has happened for GRSC with the Bangladesh order. So I think presents a good opportunity. I think the next 5-10 years structurally would be very positive for most of the defense companies. And I think across the board, the names you took, BDL, HAL, if you want to play safe, I think HAL is the best bet that we are looking at. But even the likes of BDL, BEL, BML, they would all explosively go. Masgaon, Cochin, I think all will do very well in the long term, even GRSE for that. But yeah, it will be a bit up and down here and there. It will not be linear in nature. But yeah, after this dip, you should certainly look at accumulating these stocks.
Okay. And is there a sector that you are purposely staying away from after Q1?
Yeah, I think broking is something we are not very confident about after this Jane Street, etc. issue. And, options were driving most volumes. If you compare internationally, it was a bit painful. I think even some of the equity exchange related stocks might have some trouble. And NSDL, the way they are talking about, ramping up the non-institutional business, I think CDSL could have some challenges there. So I think these are the few pockets that we are not looking at.
Fair point. Sharaji, as always, it's such a pleasure to listen to your calm voice. Thank you so much for such wonderful comments, and let's hope of getting together soon. Have a nice evening, sir.
Thank you.
That was Sharad Avasthi, the head of private client group at SMIFS Securities from the city of joy, Kolkata, joining us. 3:28, ladies and gentlemen. T-1 on the markets draws to a close, flat as flat can be. 24,900 was an area which met with a lot of resistance as far as markets are concerned. We have the monthly expiry tomorrow, as also July draws to a close. You have the last trading session of July, which has been a disappointment for the market. It has given back 1,000 points on various reasons, primarily a space where valuations ran ahead of prices ran ahead of valuations and therefore profit booking, as also the near absence of the Indo-US, the much talked about Indo-US trade pact, nowhere to be seen so far. This was supposed to happen in early part of July. It didn't, and it triggered a selling pressure on the market, which we are sort of seeing lapse over so many days. Yesterday, the Nifty touched a low of 24,600. From then on, there is a bit of a bounce back. This is primarily short covering, and let's hope it continues tomorrow. and two important things happen. Nifty reclaims 25,000 not only for the FNO expiry close but also for the close of July. That's critical for August, and more importantly you see volumes coming back into the market. Two things have been missing. One, sustained trader volume and investor interest has just gone away. And true, the FNO market has dried up completely after SEBI's order on Jane Street. That's just not hit or hurt sentiment. It's destroyed it completely in the option space. So with that background in mind, ladies and gentlemen, we will get back again tomorrow at sharp 8:50 a.m. to check out the expiry trade on the Lal Street. Remember, Nifty is down 4% in the month of July. Let's hope some of that is taken back by the bulls on the Lal Street tomorrow. Thank you for watching. Continue to remain glued to Business Today Television.
We don't want to fight. We have done this. We have just done this action. Surrender. Immediate surrender in 30 minutes.
भारत युद्ध का नहीं, बुद्ध का देश है।